Have you ever stopped to think about how quickly a perfectly normal bank account can be frozen? Not because you did anything wrong, but because your bank thinks one of your transactions might be connected to the wrong country, the wrong company, or the wrong person. Well, last week the UK released a new update to its sanction guidance, and the way banks are reacting is a reminder of something very simple. Your money is not really yours if it depends on a single country's risk filters. I'm Matteo Maglia, Partnership Manager in GloboBanks, the banking introduction company for international accounts. Every week, our clients face a situation where compliance rules change overnight, and the people who have only one bank in only one country are always the ones who suffer the most. Today, I want to show you exactly what's happening in the UK right now, why banks are becoming more aggressive with sanctions and accounts freeze, and how you can protect yourself with proper diversification and the right introduction strategy. Let's get into it. Over the last year, UK banks have become significantly stricter, but this past weeks, the OFSI, the Office of Financial Transaction Implementation, released updates guidance that makes banks even more cautious when handling international payments. What does this mean in practice? It means banks are now expected to freeze funds the moment they suspect a sanction link, block payments even when the client is completely innocent, and hold money inside frozen accounts until the regulator gives explicit clearance. And in case you're wondering, yes, this can happen to perfectly legitimate clients. All it takes is one transfer going through the wrong correspondent bank, one payment with the wrong keyword, one counterparty located in the sensitive region, or even receiving money from someone who you don't know is flagged. This is not theory, this is exactly what UK banks are dealing with today. Now, most people make the same mistake. They believe that sanctions only affect high-risk people, politics, or shady businesses. But sanction screening is algorithmic, it's automated, it's often done by compliance filters that don't understand context. You may be sending money to a supplier, a contractor, a partner, or even a friend abroad, but if that transfer looks suspicious to the system, your bank does what the law tells them. Freeze first, investigate later. That can take days, weeks, sometimes even months. And during this time, well, your money is locked, your payments fail, your cards stop working, your business suffers. This is why we always tell clients at GloboBanks, a bank account is not an asset. A banking structure is an asset. And the UK right now is the perfect example of why. Let's talk about the UK specifically. It's a strong jurisdiction, great banks, great financial infrastructure. We work with the UK a lot at GloboBanks because it can be an excellent hub when used correctly. But the UK is also one of the strictest countries in the world when it comes to sanctions compliance. Banks are scared of fines, scared of losing a correspondent banking relationship, scared of being accused of weak due diligence. So what do? Well, they over-comply. They freeze more accounts than necessary, they block more payments than required, they reject more international clients, especially those opening accounts without an introducer who can explain their profile correctly. We see it every single week. The exact same client who gets rejected doing the process alone gets approved when introduced through GloboBanks with the right explanation, the right documentation and the right positioning. This is not luck, it's how the system works. Now, many people watching this might be thinking, okay, Matteo, but this is the only UK, right? Not anymore. In the last months, the EU thickened sanction screening. Singapore became more selective with foreign clients. The US is pushing banks to expand their AML filters, and even countries known for being easygoing have increased automated transaction monitoring. Sanctions risk is global. False positive are global. Compliance panic is global. But you don't need to be afraid, you just need to be prepared. Because the problem is not the sanctions themselves, they are legitimate. The problem is when a bank sees you as a risk instead of a structured, low-risk international client. The difference determines whether your account stays open or shuts down at the first suspicious transaction. So, what is the solution about it? The first rule is very simple. Never rely on one bank. Never rely on one country, even if that country is the UK, even if that bank is prestigious, even if the relationship feels safe. Diversification is not a luxury, it's a survival strategy. And at GloboBanks, when we build a banking structure for a client, we don't think which is the single best bank. We think which combination of banks in which combination of jurisdictions will keep this client protected when the rules change. Because rules do change, and UK updates like this week's OFSI guidance are exactly the kind of events that expose who is prepared and who isn't. Second rule, open accounts the right way. Not with a random online application, not with apply now buttons, not by guessing what the bank wants. When banks don't understand your profile, you are dangerous to them. When GloboBanks introduce you, you become predictable and much easier for them to onboard. The difference dramatically reduces the risk of being flagged or frozen later when the compliance filters thicken. And third rule, choose jurisdictions with intentions. If all your banks are in one country, you don't have diversification. You have an illusion of diversification. A strong UK account can be excellent for sure in the right banks introduced also with GloboBanks, but it should be balanced with an European hub, a non-European hub, and possibly a private banking relationship in a country that offers long-term stability. This is the kind of structure we build every day for clients safe, compliant, diversified and resilient when the bank becomes strict, which is exactly what's happening now. So, to wrap this up, the UK sanctions update is not just a news story, it's a warning. Global compliance is thickening, banks are becoming more cautious, and if your entire financial life depends on a single jurisdiction, you are very exposed. But if you have a solid multi-jurisdiction banking structure built with the right introduction, you stay ahead of the system, not underneath of it. If you want to understand how diversify properly, which countries make sense for your profile, and how GloboBanks can secure accounts that stay open even when the rules change, you'll find a link below. Share a few details about your situation, and our team will review your profile and tell you exactly which strategies make sense for you right now. I'm Matteo Maglia from GloboBanks. Stay safe, stay diversified, and I'll see you in the next video.